All right, everybody, this is John. Welcome to the free videos. And kind of a bit of a nothing burger today in the S&Ps. The intraday action, we were only down 23 points, but the intraday action was a little weird because it was like we were down 23 points, then we rallied like 50 points, and then some news hit from the Bank of England, and we dropped 50 points very quickly, and then end of the day down 23. So kind of an ugly bar. One thing I want to point out here is that this year, every time things have looked their most ugly is also when the VIX has been at 35, and that typically has led to at least a short-term bounce. Like that was obviously a little bounce. This one here was a bigger bounce that just kind of ended up, pulling back and then going to an even bigger bounce. And then here we got a, pretty decent, this was a 200 point or so run in the S&Ps, and we're kind of getting there again. So the lesson learned here is just not a time to get aggressively short, in my opinion here, but not that I feel super comfortable long either. So this is just for me has been a, hey, let's day trade this market, using 0DT SPX, try to get a little cash in the pocket while we're waiting for this to unfold. No reason to have overnight risk in this environment. So we do have, of course, the PPI number tomorrow, and then the CPI number on Thursday, and all markets are on those. Conversely, of course, anytime we've gotten down, this zone down here, so the top of the zone's around 2350. That's also been a topping point, and here we got to 2350, and we got a little bit of a top, but we got another run. And of course, 20 is kind of the classic topping point right there. And then you can see when we pulled back here again, we got a top and yada, yada, yada. So again, we're just kind of we are at some extremes in the VIX, and that can certainly drive price action and all that kind of fun stuff. And then the only other thing I wanted to look at here is just the dollar. The dollar basically, the entire world is a derivative of the dollar here. And so if the dollar is strong, almost everything else on planet Earth right now is weak. And so the recent stock market explosion to the upside coincided with this pullback in the dollar. And now that the dollar is rallying again, guess what? Stocks are down. So this is the market that's driving everything. Obviously, it impacts other currencies, but it impacts commodities. It impacts the U.S. stock market by far. And of course, a lot of this also kind of tees up with interest rates on the 10-year note. This is what drives mortgage rates as well. And we've got almost as high as 4%. And we're starting to work our way up there again. And of course, I do expect big fluctuations this week once we get the PPI and the CPI. Once those come in, that's going to be able to tell the Fed, oh my gosh, we are going to continue staying aggressive with this whole tightening thing until we just run this economy into the ground. Or is there going to be silver lining in any one of these numbers that would allow the Fed to just get a touch less aggressive? And that's really what the market is waiting for at this point. All right. Good luck tomorrow, and we will see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.